Best dividend stocks are the way to get the best regular income with the support of a growing stock portfolio. Are you an owner of a growth portfolio? Then do not miss out on the safe and sound regular income from the best dividend stocks. In this video, we bring you the top 5 best dividend stocks that you need to watch out for right now. But recommending stocks is not the sole purpose of this video. We want to provide a summarized education on how and why companies return profits to shareholders and why owning some regular dividend income stocks can help you with your financial goals. Dividend stocks are not flat in growth always. Thus, some picks can give you both dividend and stock growth incomes. The 5 best dividend stocks we select will be a cherry on top of this learning so that you can even find your own such stocks. So, do you want a regular income plus growth portfolio complete with these 5 picks? Then let's dive into it. Chapter 1. What do companies do with profits? We must first understand what dividends are. Dividends are basically the cash that the company provides its shareholders at regular intervals. This is different for various companies. For example, Reliance Industries paid a dividend of 8 rupees last year in 2022. On a share price of over 25.70, that yields just 0.3% per share. On the other hand, ITC paid an 11.5 rupees dividend on 330 rupees share price, thus yielding about 3.5%. If you're not familiar, you should always look at the dividend yield figure rather than the absolute rupee or dollar amount to exactly get how much dividend benefit you get per rupee invested. In our example, ITC pays over 11 times more dividends per rupee invested than Reliance. Why is this so? To understand this, we must look at how companies use the profit generated. See, companies generate profits year after year, but they can essentially use it in only one of 3 ways. First, expand their business organically by capital expenditures or inorganically via the acquisition of smaller businesses. The second way is to pay the outstanding debt the company owes so that it has a less leveraged balance sheet. The last way is to do nothing and build up a stockpile of cash which can be used after some period to conduct a large expenditure or acquisition. However, these ways do not account for how companies return value to shareholders. They can either buy back the outstanding shares from the market or straight away hand out cash to the shareholders. Buying back shares increases net book value per share and hence the stock price will follow that. Otherwise, dividends are the way to go. Dividends are declared to provide regular income to the loyal shareholders for standing with the company in the long run. So what is the difference between Reliance Industries and ITC Limited, which have such a stark difference in the dividend yield? We'll learn that in the next chapter of the video. But before we move on to that, if you're liking this video so far, drop a like and press the subscribe button for more such content. Chapter 2. How to select the best dividend stocks. Differentiating between Reliance Industries and ITC Limited is our paved path to understanding how we pick the best dividend stocks. So what does a good dividend stock mean? Is there a dedicated and demarcated criterion? Like all things investing, the answer is not that simple. A dividend stock has a good dividend yield, but it cannot be merely decided based on that. In addition to this, the stock has to have a good historic record of paying consistent dividends. The high dividend yield should not be caused by either a sudden special dividend or a drastic fall in share prices. There are many companies with a long track record of paying good dividends. For example, companies like Coca-Cola and Colgate-Palmolive have paid a dividend of more than 100 years. Yes, you heard that right. These companies have been consistently paying dividends for more than a century. It also has to have what is called an earnings cover, meaning it should have enough profits year after year to pay for that dividend. This can also be checked using a metric called payout ratio, which measures how much of the profit is being paid out as dividends. This is the part that makes the estimation of a good dividend stock quite difficult. A low payout ratio means safe dividend payment as a decline in profit next year will still be able to pay the same dividend amount consistently. However, it may also mean that the company is a growth company that looks more to invest in its business, and if needed, it may divert more funds to that part by reducing the dividends. Conversely, a high payout ratio threatens the security of paying a dividend every year, but it also means that the company is a dividend aristocrat, which does not look towards growth as much and just pays the dividend as promised. This also means the company has to have a good dividend policy to be consistent. Let's bring back our examples of Reliance Industries and ITC Limited to analyze these metrics. Reliance has paid a dividend since 1989, annually quite consistently, although with some periods of reducing the dividend amount in times of adversity. ITC is more than a 100-year-old company, so it has paid dividends for much longer and consistently at least from 2001, as can be said due to a lack of long-term data. However, in terms of payout ratio, the contrast is sharper. While Reliance pays around 10% or less of its profit, ITC goes on to declare 80% or more of its profit to be cash dividends. This indicates that Reliance is a growth company while ITC is a dividend aristocrat. This does not mean that the stock of ITC does not grow, but that is not the key reason to buy the stock. So let us know which one you prefer as a dividend-paying stock, Reliance or ITC. Go down and type your answer in the comment section. Chapter 3. Our picks of the 5 best dividend stocks. So now let's come to the main part. Based on these parameters and do's and don'ts, what are our 5 picks of dividend stocks? Our basic filter is a long dividend history of more than 20 years, has to be a large cap stock with over 40% payout ratio and yielding 3% or more currently. We've also kept our picks diversified in terms of the sector to reduce concentration risk. We've also mostly excluded PSUs, which are government-owned and run companies, except for one exceptional pick. PSU stocks usually have a high dividend yield and history, but poor growth prospects to actually benefit from the dividend. After all, if a stock paying 10 rupees dividend is down 20 rupees after buying, how have you made any money at all? The first pick is Britannia, the great biscuit maker. It has shown superb long-term stock as well as dividend growth that satisfies all these criteria. The second is Bajaj Auto, the famed 2- and 3-wheeler manufacturer. Bajaj is a well-recognized brand with long-term performance history. The third pick is our PSU pick, and that is GAIL India. GAIL provides good dividends, like most PSUs, but also has good performance due to the natural gas boom in India, which is still an ongoing growth boost. The fourth pick is from the IT sector, a relatively beaten-down stock, that is HCL Technologies, which is currently yielding over 4%. HCL is also going to see better days when pressures on the Indian IT sector are relieved and investors can get good dividends paired with good stock returns. The fifth and final pick is, drumroll, ITC Limited itself. The example used above has already shown that ITC is a dividend aristocrat. ITC engages in a diversified consumer business, from selling Sunfeast biscuits and Ashirwad flour to Gold Flake cigarettes. Thus, all of these are quite recognized brands in their sectors and have sufficient performance to be listed as large-cap stocks in the bourses. Most importantly, they're great dividend payers, which makes our circle of analysis complete. These are the 5 best dividend-paying stocks you need to watch out for right now. Chapter 4. How can dividend stocks help your portfolio? So let's get you some guidance on how to build your portfolio which has these best dividend stocks. Asset allocation is the most important pillar of building a portfolio, and allocation of some space to regular income stocks like these is essential to have an all-rounder portfolio. The first is, why hold such stocks? Simply because you may need some regular income, and secondly, these are stable, stalwart companies that can stand adverse weather of a recession and so on. The second is how to pick. Most of the parameters have already been explained in the section above. You can even just take these 5 picks after a careful fundamental analysis that covers the question of what to hold. The last part is when to hold. The overall answer to that is to have a defined risk profile. Young investors can opt in and out of allocating capital to dividend stocks according to market cycles. For example, the year 2022 to 23 is a period of rising interest rates, which means overall business activity will decline and so will the stock market. Owning dividend allocation in such a period is beneficial, while for older investors, allocation to dividend stocks is compulsory as they need regular income for subsistence. Therefore, your decision of asset allocation to the best dividend stocks should be based on your own risk appetite and the final aim of achieving financial goals. This brings us to the end of the video. To summarize, what do we know? What have we learned? Dividend stocks are a good way to build and conserve wealth. Companies pay dividends to reward the shareholders for staying invested and supporting their income. Good stock investing needs to pick the best dividend stocks, which can be defined by dividend yield, payout ratio, and long payment history, aided by overall business fundamental strength. Your allocation to dividend stocks should be based on your age and risk profile, combined with your overall goals of having a good regular income. So use our 5 dividend stock picks to your strength and invest accordingly. Before you think of moving out, do not forget to reach out in the comment section to type your preference for a dividend stock, Reliance Industries or ITC Limited. Press the like button if you haven't already and subscribe to the channel for more such content. Do you want to know more about how money works and want to maximize your investment returns? Then visit this video to the Psychology of Money book summary.